A malpractice settlement is included in income. Carol Holliday sued her divorce attorney seeking damages for failure to properly represent her, which led to her accepting less than she was entitled to in a settlement of marital assets, including her spouse's pension plan. She hired a lawyer, sued her lawyer with another lawyer. They negotiated a settlement. The agreement made no mention of marital assets. Rather, the malpractice defendants, the law firm that did the bad job of representing her in the divorce action, did not admit liability or fault, and the parties did not allocate any of the settlement proceeds toward any particular claim or type of damages. That's my emphasis, that underline there, okay, because it's really important. The lack of specific allocation to recovery of marital property dooms the recovered amount to classification as ordinary income, where it might have escaped tax altogether if the payment by the law firm that failed its duty was to replace or make the plaintiff whole for marital assets, might have escaped taxation altogether. It's another situation where knowing something about how a settlement agreement is going to be treated for tax purposes can make a big difference in how it ultimately is treated for tax purposes. The CPA can be a big help when the lawyers are allocating the proceeds, and the CPA's help should come when you make the claim and when you're allocating the proceeds in a settlement agreement. Both can be extremely important. Tax court decision in the estate of Morrissette. It was an IRS win on valuation and penalty issues. I want to wade into this mess and see if I can clear it up. The estate of Morrissette was originally adjudicated in the tax court back in 2016. The taxpayer won when the court held the economic benefit regime in Code Section 1, Regulation Section 1.61-22 applied to split dollar life insurance arrangements between the revocable trust set up by the decedent and trust established for the benefit of her sons. That was a win for the taxpayer in April of 2016. But the story doesn't end there. The IRS appealed part of that decision, and they're back in tax court in 2021 with a TC memo, giving the IRS a huge win on the valuation and related penalties. Some perspective is needed here, I think, because the split dollar arrangement at issue in Morrissette is not the type of plan used for the typical client. If you're not talking about amounts of 30 or 40 or 50 million dollars in an estate, you're wasting your time and your effort to try to use the economic benefit regime with a split dollar policy. You can use a split dollar policy very creatively in all kinds of financial and estate planning, but you have to be very careful with the terms and who owns the policy, who's the beneficiary, and who pays the premiums. Knowledgeable. Every life insurance company has an advanced planning department. You should not expect to do this planning with the agent that's soliciting you for the policy. You want the advanced planning department of Nationwide or Connecticut Mutual or whoever you're talking to. You want the advanced planning department involved in helping you set up an estate of Morrissette type plan. Payroll is a problem for a church. This is a church in Virginia. The First Baptist Church of Sterling hasn't paid its payroll taxes since 2008. It hasn't given its employees, it hasn't reported the W-2s. It's given its employees W-2s that show the withholding, but it hasn't remitted the withholding to the government. It's sort of an independently determined tax rebate plan for the people that work for the First Baptist Church of Sterling. They get a W-2 that shows withholding, but the church has never sent the withholding in. These employees file their tax returns. They claim the benefit of the withholding. The government gives them the benefit of the withholding, but the government never got the money. Certainly, the government should be vigorous in its pursuit of these claims, so far, it apparently is not. There is, and for whatever, you can imagine the reasons why, that the bureaucracy is loath to take on the First Baptist Church, or any church for that matter, on matters of payroll taxes or property taxes, the church paying taxes, and especially if the church is involved in charity work and doing good work, it's a hard case to sell. I believe the IRS lacks the nerve to really challenge the self-employment tax liability of LLC members, and Congress is a no-show on this issue. Tax Notes today on June the 10th. Kelly Taylor writes again, the IRS's position on limited partners and limited liability company members claiming exemptions from self-employment tax continues to vex practitioners, which could be a signal for Congress to intervene and conclusively define the term limited partner. That's a quote from Kelly Taylor's article. The IRS reliance, in my opinion, on Rinkemeyer, which they do rely on in this talk, is misplaced. According to some respected practitioners, and this practitioner, Rinkemeyer is lousy facts for the government. You can read the summary. If you read this article in Tax Notes today on May 24th, 2021, an article by James R. Brown, More Pushback on Self-Employment Tax Audits of LLC Partners. He makes the point that the Rinkemeyer partners arrangement was abusive as far as whether or not they might be liable for self-employment tax. And I personally have negotiated settlements at Appeals Division on this issue because the IRS is not going to trial on these. And anyone who wants to talk about that, it's really easy to contact me. I'm not hard to find. Does the mark-to-market election by a single member LLC bind the member to the election on securities owned by the member? So here, a partnership owns securities, and a limited liability company, which is wholly owned by that partnership, also owns securities. The limited liability company is a single member LLC. The single member LLC makes a 475F1 mark-to-market election, marking to market the securities that the single member LLC holds. That should not be effective for the securities that the partnership holds. The partnership owns the single member LLC. The partnership might make an election which would be effective for the LLC it owns, but the LLC that is owned does not make an election for the partnership. I found this little sign, two-way, no way, right? That's what that sign is about. This is not a two-way street. It's only one way. Should the election by a branch or division be applied to the owner's separate activities? In my opinion, no. Here, the plaintiff is seeking partial summary judgment. This is not an opinion. The court has not responded. The court has not ruled. This is a request by GWA LLC et al., filing a tax court motion for partial summary judgment that the tax court says two-way, no way. Finally, the latest practice unit explains how to calculate a partner's outside basis. This is PAR P002, updated May 19, 2021, and released for us on June the 10th. How to properly calculate a partner's outside basis. That's necessary when you're determining the maximum amount of any deduction or loss that passes through to the partner, when determining the gain or loss from the disposition of a partnership interest, when determining the tax consequences of cash distributions, and the tax consequences of property distributions for that matter. This practice unit is preceded by 4 other practice units that have been issued, beginning with one back in April, that address accounting for partnership liabilities, the sale of a partnership interest, and liquidating distributions of a partner's interest in a partnership. And you say, wait a minute, Lynn, that's only 3. Well, there are 4. The first one, accounting for partnership liabilities, there are 2 practice units on that issue, 1 each on sale of partnership interest and 1 on liquidating distributions of a partner's interest in a partnership. Thank you for your attention. Thank you for your continued support of this program. I look forward to seeing you this fall at Fall Fest, and I look forward to seeing you shortly this month in some of our replays that are part of Spring Splash. Take care, stay safe,